Hello and welcome to FML Fund My Life, a podcast brought to you by MyWallSt. So let's get straight into part 2 of Investor Chat. And if you didn't catch part 1, I'd advise you to go back to episode 16 and give it a listen. So it's time to start ramping up your portfolio for success. And it's not an easy time to do that right now with the market the way it is. So you need all the help and knowledge you can get. And that's where we'd like to help. So stick around to hear our thoughts on the economy, recession-proofing your portfolio, our favourite female-led businesses, plus we tell you what stock of ours is furthest in the red. We also tell you why we're ignoring those red warnings and sticking by these businesses, and a couple of listener questions as well. So Anne Marie, let's get right into it with a serious question. And as well, we're in a serious economic climate at the moment. So young investors are likely feeling very concerned right now about the future potential of some of their investments. So what advice would you give to a new investor to give them some hope for the future, which we all need?
Yeah, I suppose if you're worried about your own kind of financial situation because of, rising cost of living, or maybe you're worried you might get laid off, I'd say go back to like basics of even before investing. Check in with your savings account and make sure you have enough to cover 6 months of expenses. And that number may have increased because of inflation and the cost of living going up so much. Your rent might have increased, your food budget might have increased, your childcare expenses might have increased. So I would say check in with those and make sure that you're keeping up, because it's entirely possible that you might need to skip putting money in your investment account a couple months to top up your savings account. That's totally acceptable. It is a pretty rough time out there. And also, we're about to enter the holiday season. People's spending tends to increase in this period. So I don't think you need to be too hard on yourself for that at the minute. You can be kind to yourself. This is a marathon, it's not a sprint. Sure. And then I'd also say when it comes to then investing, remind yourself you're in this for the long term, and that short-term volatility is kind of just noise. You're looking for more, I suppose, signal or message within that noise if you're maybe concerned about a particular company or stock. And so I'd say maybe to boost your confidence around continuing to invest, or, maybe a certain holding that you have is down significantly and you're starting to feel a little bit shaky on it, check back in with your investment thesis. Hopefully you have that written down somewhere, or, we always kind of say that, maybe if you're picking on a company, write down your 4 or 5 bullet points of why you like it. And I like the management team. I like how much the CEO holds in terms of stock. He owns 5% of the business. I like that. It's in a growing market. It doesn't have any competition, whatever it might be. Check back with those initial bullet points and see if they're still true, and see if maybe the macroeconomic environment has challenged them in some ways. Maybe there's a completely different competitive environment out there. Maybe the product isn't as recession resistant as you might have thought, but check back in. And, even if a company is being challenged, it doesn't necessarily mean that it's completely fallen apart as an investment. Maybe go back and check in. And then if if there's a company you're particularly worried about, ask questions to us or to other people at MyWallSt, or other kind of people who might be experts in that particular sector. Reach out and see where the winds are blowing, and see where things are maybe going to settle.
Yeah, some great tips there. And yeah, I do agree that having a 6-month emergency fund and investing consistently into your investment portfolio might be very difficult at the moment, especially because prices have changed so drastically. So it's not like we all got a chance to get used to everything being a lot more expensive. So yeah, I agree. Definitely be kind to yourself. And, if you miss a month or a few months, just make sure you come back to it. I think that's the best thing to remember, to keep in your head, that just because you miss a few months, do have a plan to get back to consistently investing in your portfolio. But then kind of going on from that and talking about the recession and the kind of where we are at the moment, is there such thing as recession-proof in your portfolio? And if you can, how can you do it?
Yeah, you definitely can introduce elements of recession resistance or recession proof. Maybe, I don't think we can confidently say recession proof, but stocks that will fare better in a recession maybe than others. But ideally you would do this diversification prior to a recession set again, which I know is unfortunate to say to people now. But you're hoping that you hold a few boring brick and mortar retailers that will hold through a recession. So, if your B2B software company absolutely sells off by 80%, you don't feel so bad. you basically want to make sure that a certain percentage of your portfolio is sitting in businesses that have been deemed essential to consumers. Maybe even go back to that episode we had where we had the pyramid and we talked about investment, the investment period to ensure you're diversified, and make sure, you have a percentage of your portfolio sitting in those bottom tiers, the really old, kind of boring, slow moving stuff. And so you have to sit down and ask yourself, right, what do consumers absolutely need to spend money on? That's things like food, home repairs, even low-cost gyms are pretty recession resistant, because maybe like a person can't justify $120 a month, but like $10, $15, $20, like going to the gym is really important for a huge percentage of the population. I don't think they're going to throw that out. And there's even like some surprising ones that we've come across over the last couple of months to a year. Lots of reporting on how recession resistant cosmetic spending is. People still end up spending on their skincare. And then we have begun to see a little bit of recession resistance in terms of certain subscription services. So Netflix and Amazon Prime seem quite resistant, simply because like they're just so ingrained in people's lives. It seems unlikely that they will cancel them. Sometimes people can become quite pessimistic in times of economic downturn, and they say, oh, people can't afford houses because they're paying for Amazon Prime, or, they're going to the gym. I think that is a really ridiculous attitude to have, because like, what's the point of making money if you can't live a little? People deserve to have the right to like watch a movie and go to the gym. So like you can invest in those companies.
I also think like people might not have enough money to go out for like dinner, drinks, go to the theater, go to a nightclub, but they can they want to stay in then, and what are they going to do? They're going to watch something, like, so they need those streaming services because they are cheaper than a full blown night out on the town.
Yeah, or even going to the movie theater. Like, it is cheaper to get a Netflix subscription service for one or two people than it is to go to the movies. So, like, it's not ridiculous to see recession resistance in that, but I would say they probably sit on, like, a tier. So, like, absolutely 100% recession resistant is food. So, like, look at, stocks that you like that happen to be selling groceries, I think would be your first best bet.
Mm-hmm. Okay. So we actually had a listener question ask us, kind of a nice question like this one. What females in business are we both inspired by? So I would say for me, it has to be a Bumble. Whitney Wolfhard. I just think she's a great leader. I love her story of why she created Bumble. So she was actually working at Tinder. She was really high up in Tinder. I think she was like the not founder, but she was pretty high up in it.
Yeah, she came in really early and was like very instrumental in their marketing process. Like, she launched them on all the college campuses. She's like people are like, she is the reason Tinder was successful. Yeah,
so she was massive there, and then she actually left Tinder because of a sexual harassment claim, and that kind of spurred her on to create a safer place for women to date, and that's where Bumble kind of came. So I love that story, and like, I love the fact that women have to write first. It just like, it weeds out a lot of like weird stuff, because just you don't get like, there's not as much like, I know you like on the other apps you have to match with someone for them to be able to write to you, but there is just that extra level of like, you have to write to them first to initiate conversation. It just does remove a lot of like unnecessary weird first questions that you sometimes get on the other apps. And then she also introduced initiatives in like different countries, like specific to like, their kind of safety arrangements. So like in India, like sexual harassment and assault is very high against women. So she initiated like different kind of things to help protect women's safety. I think one of them was that you would never be able to see someone's like second name, and the location settings were very protected on it as well. So I love the way she kind of like altered the app to fit different countries and stuff. I thought that was really innovative. And yeah, like as a user, like I do like use Bumble. Like I think it's like a good app. I remember Rory saying he actually met his partner on Bumble, so there you go. But then when I think about it, like I like the business, but from an investment standpoint, I actually don't invest in it. Which I think is interesting, the way you can like a business, but that doesn't mean you have to invest in it. I just think it's such a competitive space. Yeah. And even when I look at it, it's not my favorite dating app. Hinge is. And I think Thursday has also become popular. So from investment standpoint, I think it's a little bit risky, but I still love the mission that Whitney Wolfhard is behind.
Yeah, I would agree. Operating in a very competitive environment against a Goliath, because Match Group owns Hinge and Tinder, and I don't think they own Thursday. But it's very hard to go as an individual app to go up against someone that's will just buy up anything.
Yeah.
One thing I did like about Bumble when we did the initial write-up on it, which was something I hadn't really considered, was all dating apps have an essential flaw, which is once a person like gets into a stable relationship or gets married, they don't need them anymore, right? So there's no way that you could, in theory, lock up a user for life, you know?
Yeah.
And so that was this kind of problem. How do you, it's almost like if your product is really good, it's horrible for business. You know, if your product, and you're kind of like, how do we solve this, And Bumble might actually be onto something there with, how they have like the Bumble BFF and the Bumble Biz segments. Those are continuing to grow quarter over quarter. And I think that is kind of nice because it then allows people to not just consider Bumble as being a place to build a dating profile. It's like, no, you build a profile of yourself, and that can help you make connections, whether they be romantic or not. And I think that's kind of nice. It's kind of like a more casual LinkedIn, or like maybe like an old school Facebook. And I think that could have potential to it, because there is like a formality that LinkedIn has that isn't great for just kind of building like, like a network to just talk to someone about. Maybe you're not trying to get a job per se. And I think that's really nice. And one of my friends lives in Berlin, and she used Bumble BFF recently and said it was really nice. And she met like a really nice friend on it. And then they got together with other people they met through Bumble BFF, and she said it was really great, and that people she found the experience really easy to use. So I've
actually met some of my closest friends on Bumble BFF when living abroad. Always only when living abroad though. Yeah.
So it seems, I think that could be like a nice little, at the end of the day, maybe they fall off for dating, but like no one else seems to be kind of going down this avenue. So that's kind of maybe a little competitive edge for them.
Definitely. So who's your favorite female-led business?
I have one. It's not publicly traded, but I have been reading about this business quite a lot this year. Forbes did a pretty big profile on this CEO this year, and it was a really interesting article. I'd recommend people go and read it. And I want to talk about Canva. That design company. So Canva was founded in 2013 by Melanie Perkins. She's Australian. And it just started out as like a yearbook software, how do we make interesting like designs for a yearbooks, and it has kind of now grown into the default easy to use design tool for just about anyone and anything. And her origin story is really interesting. She started the business when she was 26, and she went around pitching to try and get funding. She was rejected by more than 100 investors during that process. And in her Forbes article, they talk about how she actually got into a pretty terrible kite surfing accident when she was at like a pitch event for these like big investors who love kite surfing, and she had taught herself how to kite surf over the course of a year, because she was like, I'm going to this event, someone's going to invest in the business here. And she got into an accident and was stranded at sea for like 2 hours. So she's obviously very, very dedicated. But that dedication comes from the fact that she like saw a real opportunity, because for a long time, design was just reserved for large companies that could pay to have like a dedicated team versed in Adobe and the Adobe suite, and, small and medium-sized businesses and individuals kind of didn't have an ability to participate in that type of thing. But she was like, no, as like social media becomes more powerful, e-commerce becomes more powerful, people need this like legitimate, considerate, curated brand to exist online. And she's like, we need to create an easy to use tool for these people, that maybe a company only has 5 employees, or maybe it's just like one person with an Etsy shop or whatever. And she was dead right. Like, that is a definite niche in the market, and she's kind of carved it out for herself, and it's become very fast growing. And really, by targeting small players, it means that she hasn't bumped up or brushed up against Adobe at all, which has meant that she's been able to scale this business really unchallenged by an absolute Goliath, like a very powerful company that like is quite impressive. They have very impressive software. And shockingly enough, in the research process for this piece, I discovered that Canva, which is like a software company, like that is very much in its early years. It was only founded in 2013. It's growing really rapidly. It is profitable and has been since 2017. Isn't that crazy?
I'm not surprised, because I use Canva every day as a social media manager.
I that blows my mind that like you could be doing like have a company that is so quickly growing and be profitable since 2017. That's very impressive. Anyway, Canva is now worth $40 billion, and Perkins owns 15% of the business, which means that her stake is worth $6 billion, which is crazy. Absolutely crazy. So I'm very, very impressed by Melanie Perkins and her business.
Yeah, like Canva is great. It's so easy to use. Like, I didn't have any design background, and like I can make things pretty good in it.
Yeah.
Yeah. So, okay, going on to us talking more about businesses and stocks. So I wanted to ask us this because I think it's important for like new listeners that might think me and you, more you, is like, you know, all of our stocks are in the green and, you know, we know exactly where our portfolios are going. Well, we kind of do none of that. But, you know, if you kind of have this idea that all of our stocks are in the green, they're not. So, Anne Marie, what stock have you invested in that is deep in the red right now, like a lot of stocks are, but you believe in now more than ever?
Yeah, I actually talked about one, 4 weeks ago, 6 weeks ago, which was Netflix. We were like going over stock of the month pitches. I discussed Netflix. I'm more confident on Netflix now than ever, like feel very fine in that business. Very happy to pick up stock there now. But that's kind of a cop-out for me to talk about it again. So I thought I would touch on Pinterest, which is a company I own some shares in. I initially picked up Pinterest because in terms of like, it's almost not a social media, and it was very kind of easy to write about it like that. You know, people go on Pinterest to get shopping inspiration, and that meant we were like, gosh, this could be a really powerful e-commerce tool. But obviously in the last couple of years with changes in advertisement and stuff like that, like they've had a difficult go of it. I suppose that's to be expected. But I still think that e-commerce idea is like relevant and is good and will be successful, maybe even now more than ever, because of the changes in advertisement, because, you know, Facebook and Google are having a hard time targeting ads because of iOS 14.5, but Pinterest has an easier time, again, because people go onto the platform looking for things to be marketed to them, if you will. And so it means that like you don't have to scrape data to appeal to this person. They're going to give it to you for free because they're going on there to search. And so I think it means that Pinterest will be able to sell ads quite effectively for targeted search, which we've seen other companies do, like weird companies that you wouldn't expect. Like a couple weeks ago, we were talking about how Walmart is making a bunch of excess revenue from advertisement because they're selling ads on their website for targeted search. So I think Pinterest can be quite successful there, but I also think the e-commerce thing is interesting. And as we've discussed probably a couple months ago, they have this new app, Shuffles, that I like, which I think is interesting as a good way to kind of activate the Gen Z group. So it's down pretty heavily, but I still think there's something there. There's still something I like about it. So a high risk, high reward stock, most definitely, but there's still something I like there.
You'd consider it high risk, high reward? That's interesting.
Yeah, it's it's so small, and it's not as comfortable as like other social media companies. Like it doesn't grow the same like new users or anything like that. So yeah, I would consider it high risk, high reward. Okay,
now you have to ask me, Anne Marie.
Sorry, of course. This is a conversation. So, Nicole, what is your stock that you're down on bad, but you still feel comfortable in?
Yeah, okay. So you might not have heard of this one because I don't think I would have heard about it unless I worked for MyWallSt and I followed Emmett's Horizon picks. So it's Atlassian. The ticker is TEAM. So in the Horizon service, Atlassian is described as an Australian enterprise software company that develops products for software developers, project managers, and content management. So very techy, basically. And their applications include Jira, if I'm pronouncing that right, Confluence, and Trello. And Trello I've actually used a good few times. But I kind of basically back this company because Emma has talked about it so much, and I kind of started researching it. And learning more about it. And now that I kind of understand the business and what investors are saying about it, it's definitely one that I'm consistently invested in every month. And even more recently in Horizon, Emmett has reaffirmed his kind of stance on the company. And after it's just actually released an earnings report recently enough. And the CEO was basically very confident that they're still in line of sight of $10 billion in annual revenue. It's just a stock that I constantly keep a watch on when Emma is talking about it in Horizon and things like that. And I'm still backing it, even though I think in my portfolio it's down 60%. So it's definitely a tough one to keep putting money into every month when you see it just going down and down. But I'm safe. I'm pretty much safe.
Yeah, it's definitely one of those it's like one of those B2B software companies that got pushed up really high during 2020. There was an awful lot of money poured into software companies like that. Yeah, and I think we are definitely in a correction. B2B in particular seems to be hit incredibly hard these last couple of months, and so but actually this is a good plug for Horizon, because Emmett just launched a new feature over there in which he has a sentiment calendar where he's constantly keeping people updated on how he feels about things, and it's really great for kind of checking in with his picks. And so, if you were interested in seeing all of Emmett's picks and how he feels about them on literally a week-to-week basis, you should go over and check out Horizon, because it's great for kind of reassuring yourself. I would say he's very good at like kind of maintaining his audience. He's always checking in. Yeah,
definitely. Okay, so then on to some more listener questions. This one is from Raina. I hope I'm pronouncing that right. And she asked us, which S&P 500 ETF would we recommend? And when we say we, I'm asking Anne Marie.
Well, we have one in the MyWallSt shortlist, which is VOO, VOO. This is overseen by Vanguard. It's fairly old. It's well over a decade old. I really like Vanguard. I think they're kind of like seen as like the old-timey responsible kind of brokerage in the United States, but it has a very low, you pay a very tiny like annual fee to be invested in ETF, like very, very low, much less than you would like a mutual fund or a managed fund or anything like that. And so for VOO it's 0.03%, which is very low. So I would say first go to VOO. The secondary option that people talk about all the time is SPY, SPY. It's the oldest ETF in the world. It tracks the S&P 500. However, slightly higher fees, 0.095%. So, you have to kind of make up your mind there. I think people tend to go to SPY first because it's the oldest, but I would have no problem. Like, I'd say first go to Vanguard, and if Vanguard is not available in your area, then go to SPY.
Yeah, I invest in VOO, so
yeah.
Hashtag not financial advice. Okay, so then the last listener question is from Mary from Donegal. So big shout out to an Irish listener. I'll take this one, but she asked us, how do you find a broker? And as she lives in Ireland, her options are D'Addario, Interactive Brokers, Revolut and eToro. And if you want more information about those brokers that I just listed, we actually have an article on them on MyWallSt.com. So if you just search, I don't have a broker, who do you recommend? That will bring you to the MyWallSt Help Centre. And even better, we also have an FML episode that's entirely about answering questions that we often get from new investors. So if you'd like to listen to that, it's episode 6 of FML and it's titled, How Will I Know? Okay, so then we're on to the Girl Boss of the Week already.
We are. And actually this week, Nicole, you have picked out the Girl Boss of the Week.
Yeah, I have.
Rare pivot.
Yeah.
Girl Boss of the Week.
So this week it's Ticketmaster, and this podcast has been recorded a little bit ahead of when this will be published, so you might be like, this is old news, but it could not be Ticketmaster after all the Taylor Swift drama. Her fans were left furious to discover that they had been locked out of the kind of line to buy tickets for her anti-hero for her world tour. And they kind of blame this on like extremely high demand, and they also made up some, I don't know, was it an excuse, but they also said they were trying to get rid of bots. But basically it was just not good. It was a complete flop. And Taylor came out and she was furious, and she said that it was so hard to watch this unfold, all her fans being so upset. And she is kind of known as an artist that always does protect her fans, and she's very vocal about that. And she also said that like this is why she's brought so many elements of her career and her tours and her albums, like recording everything about her career in-house, because she hates when things like this happen. So yeah, it was just like crazy. But like Ticketmaster did come out and say that even though it was a bit of a flop, 2 million tickets were still sold on the November 15th, the day it all kind of happened. And they also said that this was the most tickets ever sold for an artist in a single day, which is, massive achievement for her. But an interesting thing that's kind of come after this is that like people are kind of being really outspoken about Ticketmaster being a monopoly. So, and saying that, you know, it should be broken up, which I think is like, you know, that's kind of interesting as well, because, you know, we know big tech monopolies, but I wouldn't have thought Ticketmaster was a monopoly before this.
Yeah, it's a funny one because I think so. Ticketmaster merged with Live Nation in 2010, and they were like the two biggest live event companies in the United States. And people were like, "Jesus, they shouldn't be allowed to merge," and it went through anyway. But I think in the U.S., Ticketmaster has so much more influence and power than it seems to have outside of the U.S. So people complain because there's surge pricing in the United States. So like you could be trying to buy tickets or something, and obviously like there is incredibly high demand the hour that tickets go live. And so Ticketmaster is allowed to just raise prices based upon demand. So then that means that, you know, an artist might have announced, oh yeah, so tickets start at $75, and you go in there and the cheapest ticket you'll be able to buy is $200, which is ridiculous. Yeah. But Ticketmaster gets away with that because there's no alternative service. Like no one can handle like such a large influx of people. So that's one thing that they get away with in the United States, which is illegal in the European Union. So we don't have to deal with that, which is nice. There is also limitations on ticket fees here, so we don't have to deal with that. Also great. But again, that's all regulation. Like it's all EU regulation.
Yeah.
And but the bigger issue that impacts absolutely everyone internationally is because Ticketmaster is so powerful, and because it seems to be the only provider that like has the server capability to handle such an influx of people all trying to get on one website at one time. You know, I think it was something like for the fan exclusive presale, there were 3.5 million people trying to get in to the sale. Like if Ticketmaster is the only company that can handle that, I suppose that's fair enough, but it means that they have no real reason to improve their technology.
Yeah.
So like they can stand around and be like, yeah, oh, we're so sorry that 1.5 million fans didn't get tickets, but who else are you going to go to? Like you're going to go and run the Taylor Swift Eras tour off of Eventbrite? Hardly. Like, so it is a difficult thing. A couple of politicians in the United States have called for an investigation into monopoly behavior. Maybe that will, you know, come up with something. This is a real opportunity, though, for some other company to start investing in servers, to turn around and go to Taylor Swift and say, hey, you can own a portion of our company if you agree to put your tour with us. So, yeah, maybe something will come out of that.
Yeah, no, I really felt bad for the Taylor Swift fans. Are you a Taylor Swift fan?
Yeah, I like Taylor Swift. I actually was at both nights of her Reputation tour in Dublin years ago in 2018 because I worked at the venue. Okay. Cool. Yeah. So she was quite good, actually. I would say if you can get Taylor Swift tickets, it might be worthwhile.
Yeah, she's massive as well. Yeah. But, okay, so that's a wrap. Thanks so much for listening, everyone.
If you enjoyed this episode, tune back in 2 weeks' time.
Oh, that's actually a lie, because this will be our last episode of FML for 2022, because it'll be like the 22nd of December when the next one's meant to be out, and me and Anne Marie will be in the middle of our, you know, Christmas, well, not in the middle of, at the start of our Christmas holidays, so we just thought we'd come back fresh in 2023. So
we will also be 7 hours apart because of the time change, which is a bit brutal for recording a podcast.
Oh, because you'll be in America?
Yep.
Okay. Yeah. Right, well, yeah.
Sorry about it.
Very dedicated to this, guys. If you want to follow us on socials, you can find us on Instagram at Fun My Life Podcast, on Twitter at MyWallSt HQ, and on TikTok at MyWallSt. And our account dedicated to the podcast at Anne Marie and Nicole FML.
And finally, if you are ready to start your investing journey and are looking for resources, check out MyWallSt's Getting Started podcast anywhere you listen to podcasts, or download the MyWallSt Learn app. Both are linked below. If you would like to keep up to date with all the exciting things happening at MyWallSt, make sure to subscribe to our free newsletter. The link to do so is in the description of this episode.
That's all from us. We hope you enjoyed listening. Merry Christmas and a Happy New Year.
Why can't we say Happy Christmas?
Because I don't want to say Happy Christmas and Happy New Year. Because, you know.
Oh, okay. Fair enough.
Merry Christmas and Happy New Year.
You should probably say Happy Holidays to be inclusive.
Oh, yeah. Happy Holidays. Sorry,
Happy Holidays.
That's just ingrained into my head from being Irish.
I know. That's a shame.
Roll the music.